Hello everyone, welcome to EduTap. So we know that if you're preparing for any competitive exam, previous year questions play a very important role. They help us to understand trend, pattern and difficulty level with respect to that competitive examination. So as a part of this video, we are going to discuss SEBI Grade A Phase 2 Paper 2 PYQs, and we are going to discuss three components as a part of it. First of all, we are going to discuss company law. After that, we are going to have economics and then costing. And let me also tell you that the part one of this video has already been uploaded, where basically Jalal sir had discussed commerce and accountancy, finance and management as a part of this video. So please watch this part one also. And of course, this is a part two. But before we begin, just a small announcement. So EduTap has also launched this Phase 2 test series. So those of you who are preparing for SEBI Grade A Phase 2 examination for this year, you can utilize this test series. As a part of this, you are going to get chapter-wise mock test, current affair mock test, full-length mock test, and solve PYQs also. So this is going to be very handy as far as your preparation is concerned. So let us begin with the first component as a part of this video, which is basically the company law. And let us see question number one. So the question number one is the president of NCLT, NCLAT and judicial members are appointed by the government in consultation with whom? So option A, President of India, option B, Law Minister, option C, Ministry of Corporate Affairs, option D, Chief Justice of India, option E, SEBI Chairman. So the correct answer to this question is going to be option D, which is Chief Justice of India, because we know that as per Company Act, this President of NCLT, chairperson of NCLAT and judicial member, they are basically appointed by the central government in consultation with the Chief Justice of India. And why is it so? This requirement basically ensures the judicial independence, the judicial independence of these quasi-judicial bodies, right? So that is the reason behind it, and D is going to be the correct answer to this question. Now let us move on to question number two. The tenure of an independent director is for dash consecutive years, and if he is to be appointed for a second term, a special resolution needs to be passed. So the correct answer to this question is going to be basically the A option, because we know that the tenure of independent director is for a term of up to 5 years, right? 5 consecutive years. And if the company wishes to appoint the same independent director for the second term, then what is going to happen? In order to do that, the special resolution is going to be passed in the general meeting, right? And the company will have to disclose the justification also with respect to this requirement. But once he has been appointed as the independent director for the 2 consecutive terms, then what is going to happen? There is going to be the cooling off period of 3 years, right? So this is very basic information regarding independent directors. Independent director is a very important topic for your examination, so you have to prepare it, and this is a very general information. I hope you already have idea regarding this, and A is going to be the correct answer to this question. Now moving on to the next one, question number 3. Under section 124 of the Company Act, if the money is not paid to the shareholders and remains unpaid for dash years, it is transferred to the Investor Education and Protection Fund. So the correct answer to this question is going to be what? It is going to be 7 years. So B is going to be the correct answer, because when we talk about Company Act, basically any dividend amount that remains unpaid. So if there is any dividend amount that is unpaid, or you can say unclaimed, right, for 7 consecutive years, then what is going to happen? It must be transferred to the Investor Education and Protection Fund, right? So this is something that you need to know. And if you remember the last video that we had released regarding the PYQs, that is regarding 2024 PYQs, there also I would say 1 to 2 questions that year also were asked related to this section. So this section is extremely important. You can see in 2022 also one question has been asked, and 1 to 2 questions were asked in 2024 also. So please put some good amount of focus when it comes to this section. It is important for your examination, right? Questions are asked from this area. Now let us move on to question number 4. According to section 141 of the Companies Act, who is eligible to be appointed as an auditor of a company? So option A, chartered accountant, option B, company secretary, option C, CMA, certified management accountant, option D, chief financial officer, and option E, none of the above. So the correct answer to this question is going to be what? It is going to be chartered accountant, right? So a person who is going to be appointed as an auditor of the company He shall be a chartered accountant. Other professionals, for example, the company secretary, CMA, chief financial officer, they are not allowed to be a part of it, right? So this can be regarding the individual, but if let us say there is a firm, this firm is appointed as an auditor of the company. So the condition is that basically the majority of the partner who are practicing, right? The majority of the partners with respect to the firm, they must be practicing chartered accountancy, right? So this is regarding the firm, and the normal individual that is there, the alone individual, he has to be the CA only. So that is the idea regarding the eligibility. Now let us move on to question number 5. As per the provision of the Company Act 2013, a meeting of the board shall be called by giving not less than dash days notice in writing to every director at his address registered with the company. So, a meeting of the board of directors shall be called by giving not less than how many days notice? It is basically 7 days notice, right? Because we know that if we talk about Company Act section 173. So, as per section 173, basically a minimum of 7 days notice in writing must be given to every director at the address that is registered with the company to convene a board meeting, right? So 7 days is going to be the answer to this question. But however, let us say if there is a case of urgency, if any urgent case is there, then in case of urgency, what can happen is a meeting may be called on a shorter notice also, right? So over there, the 7 days requirement is not required, right? But in the normal scenario, 7 days is the I would say the period before which basically which has to be followed while giving the notice in writing to every director, right, at his address with the company. So this is going to be the answer to this question. Now let us move on to question number 6. Recently, SEBI has directed the mutual fund industry to set up an audit committee at the asset management company level. As per the provisions of the Company Act, what is the minimum number of directors required for the audit committee? So option A, 1, option B, 3, option C, 5, option D, 7, and option E, none of the above. So the correct answer to this question is going to be option 3, right? Because as per Company Act, basically the audit committee must consist of minimum 7 director, right? Additionally, it also says that basically the majority of the members of the audit committee, they shall be independent directors. They shall be independent directors. And apart from that, if you talk about the chairman of the audit committee, right, this is also very important provision. If you talk about the chairman of the audit committee, he must also be an independent director only, right? So that is, these are the important facts regarding this section, and B is going to be the correct answer, which is basically minimum of 3 directors shall be present, shall be there. Now moving on to question number 7. Application money is the money received by a company when it issues shares to the public. Once the application money is received, allotment is made to the shareholders. The minimum share application is dash percentage of the nominal value of shares. So if I reread the question, so application money is the money that is received by the company when it issues shares to the public. Once the application money is received, allotment is made to the shareholders. The minimum share application money is dash percentage of the nominal value share. So what it is going to be, what percentage? It is going to be 5%, right? So if you talk about section 39 of the Company Act, right, you must be knowing about this section. So section 39 of the Company Act, if it basically says that a company issuing the shares to the public, it must do what? It must receive at least 5% of the nominal value of shares as the application money, right? So 5%, A is going to be the correct answer to this question. Now these were the number of questions that were asked in the year 2022 regarding the company law. Now as a part of this video, now Kritika ma'am is going to continue, and she's going to discuss the questions that were asked from the economics part, and after that Ashima ma'am is going to discuss the questions related to the costing. So I hope the session was helpful.
So hello everyone, now let's start with the previous year questions of your 2022 SEBI Grade A Phase 2 examination. For your paper 2, we will discuss the economics questions. Okay, we will discuss the economics previous year questions. So let's get started. Now the first economics question is in front of you. Which of the following is not a method of quantitative control by RBI? So basically the RBI, it controls the monetary policy, or it lays down the monetary policy, and under the monetary policy there are quantitative tools and there are the qualitative tools. Okay, the quantitative tools of monetary policy are CRR, SLR, the Martian standing facility, the repo and the reverse repo. They all are the quantitative tools, while the credit rationing it comes under the qualitative tool of the monetary policy, as well as it is also known as the selective credit control tool. Okay, so E is the right answer here. I hope you were easily able to identify this. So qualitative tools of monetary policy, they are also known as selective credit control tools, and the credit rationing, loan to value ratio, moral suasion, direct action, all of these comes under the qualitative tools of monetary policy. Now let's go to the next question, that is regarding the incorrect statement regarding NBFC, the non-banking financial companies. So the NBFCs, they do not form a part of the payment and settlement system. Absolutely correct. The NBFCs, they do not form a part of the payment and settlement system. NBFCs also, they cannot issue checks drawn on themselves. Deposit insurance facility is not provided for the deposits that you are doing in the NBFCs. Okay, so if you are doing the deposits in the banks, your deposits are insured by the DICGC till the limit of 5 lakh. Okay, but if you are doing the deposits in the NBFCs, then your deposit is not insured by the DICGC. Okay, so this is also correct that the deposit insurance facility of DICGC is not available for the deposits of the NBFCs. The NBFC is a company registered under the Companies Act of 1956. That is also correct. It can be engaged in the business of loans, advances, acquisition and such. NBFC, they can accept the demand deposits? No, the NBFCs, they can only accept the time deposits, and that is also for the minimum period of 12 months and the maximum period of 60 months. Okay, so that means they can only accept the time deposits for a time period, and they cannot accept the demand deposits that can be withdrawn on demand. The NBFCs can only accept the time deposits for a minimum period of 12 months and the maximum period of 60 months. So E was the incorrect statement, and that's why here the answer is E. Okay, so these are the basic characteristics of the NBFCs that you have to keep in mind. Now coming to the next question, that is calculate the NNP at FC. You have to calculate the national income, that is your NNP at FC, from the data that has been given here. So basically, if you have to calculate the NNP at FC from GNP at MP, gross to net, what do you have to do? From the gross to net, deduct depreciation. From national to national, no change. From market to factory, from market price to factor cost, deduct the indirect taxes, add the subsidies. Okay, so GNP at MP, that is 5069, deduct the depreciation, that is consumption of fixed capital 626, and deduct the indirect taxes, that is 495, and add the subsidies, that is 69. Okay, so if you do the calculation, the NNP at FC, I hope you are able to calculate this, and I hope you got to the same formula for calculating the NNP at FC. So the answer here is 4017. So here the answer is A. Okay, and the formula is that to calculate NNP at FC from the GNP at MP, from the GNP at MP to calculate the NNP at FC, from gross to net, deduct the depreciation, deduct the consumption of fixed capital, from market to factory, from market price to factor cost, deduct the indirect taxes, add the subsidies, you will get 4017. Okay, so factor cost to market price, add the indirect taxes, deduct the subsidies, and vice versa. From net to gross, add depreciation, and vice versa. From domestic to national, add the net factor income from abroad. Okay, so these are the conversion. Now, which of the following defines the monetary base? See, monetary base is also known as the reserve money or the reserve base, or it is also known as the high powered money. High powered money, that is written as M naught. So the formula for M naught is the sum of currency in circulation. So currency in circulation plus the banker's deposit with the RBI plus the other deposit with the RBI. Okay, so this is the formula of the monetary base. So here the currency in circulation and bankers deposit with the RBI, this is the answer. The other deposit with RBI, it is usually ignored because it is a very small value. Okay, so even if the other deposit with RBI is not written, remember that it is a very small value, so it is usually ignored. So here the answer is A, that is the direct formula for the monetary base or the reserve money or the high powered money. Okay, so M naught, currency in circulation plus bankers deposit with the RBI plus other deposits with the RBI. So this is your M naught, that is the reserve money or high powered money or the monetary base, and the other formula of the M naught is currency with public plus cash reserves of the banks plus other deposits with the RBI. This is another formula for the M naught. M1 is currency with the public plus demand deposit plus other deposit. M2 is M1 plus savings deposit with the post office saving bank, and M3 is M1 plus time deposits with the banks. M4 is M3 plus total deposit with the post office saving organization excluding the national saving certificates. So remember that these formulas are very important from the examination perspective. Okay, so now coming to the next question. Now, which of the following statements is incorrect regarding the Phillips curve? So the Phillips curve states that inflation and unemployment, they have inverse relationship. So usually, yes, it is said that the Phillips curve shows the inverse relationship between inflation rate and unemployment rate. If the inflation rate is increasing, the unemployment rate is decreasing. The short run Phillips curve or the downward sloping Phillips curve. So the downward sloping Phillips curve is generally held to be valid only in the short run. Yes, it is stated that the short run Phillips curve is downward sloping, while in the long run we have a vertical Phillips curve. So in the long run, we have a vertical Phillips curve because in the long run, it is stated that we have achieved the natural rate of unemployment and the unemployment rate is stuck at this natural rate of unemployment in the long run. And so the Phillips curve is vertical. Okay. So in the long run, Phillips curve is usually thought to be vertical at the non-accelerating inflation rate of unemployment. That is the natural rate of unemployment. Okay. Now, high inflation and high unemployment are because of recession. So basically, the high inflation and high unemployment, this is the characteristic that we find under the stagflation. This is the characteristic of the stagflation. That means stagnation. The stagnation has come into the economy due to which the output is not increasing and the unemployment might be increasing and inflation is also persistent in the economy. So high inflation and high unemployment, they are because of stagflation. So all the other statements are correct. Only the D one was wrong and that's why D is the answer because you had to find the incorrect statement. Okay. So basically high inflation and high unemployment, they are generally the situation under the stagflation. And it is said that the Phillips curve, that is the downward sloping Phillips curve that shows the inverse relationship between inflation rate and unemployment rate, it broke down because of the stagflation that was faced in 1970s by US. So the inflation rate was also increasing or unemployment rate was also increasing due to which the Phillips curve shift rightwards. Okay, and the stable Phillips curve, the stable downward sloping Phillips curve broke down because there was rightward shift in the Phillips curve that showed that inflation rate is increasing and with that unemployment rate is also high. Okay, so this is the idea that stagflation, it talks about the high inflation and high unemployment, which leads to the stagflation leads to the rightward shift in Phillips curve or the adverse supply shock. It leads to the rightward shift in Phillips curve. Now, coming to the next question, which of the following statements is incorrect regarding monopolistic competition? So monopolistic competition, it exists when there are large number of buyers and sellers. Absolutely correct. In the monopolistic competition, there is no barrier to entry and exit of the firms. Correct. Monopolistic competition has product differentiation and firm bear the selling cost or the advertisement cost. Yes. Monopolistic competition like soap industry. There are so many of the different kind of soaps. So the firms have to do the product differentiation, the firms have to do the advertisements and such. Monopolistic competition has less elastic demand than the perfect competition. Now think about it, the perfect competition has perfectly elastic demand curve, while the monopolistic competition has downward sloping demand curve that is elastic. Okay, so the monopolistic competition has less elastic demand curve in comparison to the perfect competition. That is correct because the perfect competition has perfectly elastic demand curve, while the monopolistic competition has less elastic demand curve in comparison to the perfect competition. So this is also correct. Now coming to the last statement, there is no excess capacity in the long run with normal profits. No, in the monopolistic competition, actually there is excess capacity that is present. Okay, so this is the incorrect statement. In the monopolistic competition, in the long run with the normal profits, there is excess capacity that is present. So here you can see that in the long run, the equilibrium is here where the marginal cost is cutting the MR from below. So at this equilibrium point, the firm is not at the minimum of average cost. The minimum of average cost is here. The minimum of average cost is at this point where the marginal cost is cutting the average cost. So minimum of average cost is where the marginal cost is equal to the average cost. So minimum of average cost is here. So you can understand that this is the excess capacity that the firms have present, that the firms are not able to utilize in the long run. Even at the equilibrium point, the firm has the excess capacity. Okay, so excess capacity is present. So the equilibrium point is at this level. This is the equilibrium point. This is the long run equilibrium where the firm is earning normal profits as the average revenue is equal to average cost. Now the minimum of average cost is at this level of production. So this is the excess capacity that the firm has, that the firm is not utilizing. So remember that there is excess capacity that is present in the long run in the monopolistic competition with the normal profits. Okay, so E is the answer here. Now coming to the next question, which of the following statements is correct if the demand function is this? So demand function is 18 minus 3p. So remember that this is what? Intercept. This is intercept. Minus 3 is the slope that shows the downward sloping demand curve. So demand function shows the functional relationship between quantity supplied for a commodity and its various determinants. No, demand function shows the relationship between the demand and price and the changes in the demand with the changes in the price. The quantity demanded is directly related to price of the product. No, the demand is inversely, negative sign means that the demand is inversely related with price. When the price is increasing, demand will fall. So there is inverse relationship between demand and price. For the given demand function, the maximum price is 6. So let's say this is your demand. The price is 6. When the price is 6, then your demand is 0. Then your demand is 0. So yes, at the maximum price, the demand will be 0. So yes, the maximum price is 6. The maximum price is 6 and the demand curve has the slope minus 3. So yes, the slope of the demand curve is minus 3. The slope of the demand curve is minus 3. Okay, so that is the slope. The above equation shows a curvilinear demand function. So remember that this is the demand is equal to 18 minus 3p. So this is a linear demand function. This is a linear demand function, not curvilinear. So only the C statement is correct and that's why the C is the answer. Okay, so here you can see that in the demand equation, this minus b, it is the slope. It is the slope. The slope of the demand curve is minus b. That is in the demand function 18 minus 3b. This minus 3 is the slope that shows the downward sloping demand curve. Okay, so this is the idea. So the slope is minus 3 as well as the price is 6. That is the maximum price where the quantity will be 0. So now coming to the next question, that find the incorrect option. Now find the incorrect option regarding the price elasticity of commodities. So a commodity with many substitutes, if a commodity has many substitutes, then the commodity will have elastic demand. Yes. If there are many substitutes, so yes, the demand is elastic demand. The life-saving drugs have perfectly inelastic demand. That means that the demand does not change. For the life-saving drugs, the demand will not change even if the price is changing. So remember, like the insulin injections, they are the life-saving drugs. The chemotherapy or the like for cancer, if there are some drugs or medicines, so that means these are the life-saving drugs that have perfectly inelastic demand that does not change. So this is correct. Luxury goods have elastic demand. Salt has perfectly elastic demand. Does salt has perfectly elastic demand? No. Salt is a necessary good, and the necessary goods, they have the inelastic demand. They have the inelastic demand. So remember that the necessary goods, that is the goods that have less substitutes, they have less elastic demand or inelastic demand. Okay, so A is the incorrect option and that's why A is the answer. So remember that the luxury goods and the goods that have many substitutes, they have elastic demand. The necessary goods or the goods that have less substitutes, they have inelastic demand. And the life-saving drugs that is essential for your survival, that have perfectly inelastic demand that cannot change at all. So the salt is considered as a necessary good that has less substitutes. That's why it has inelastic demand, not perfectly elastic. Okay, so this is the idea. A was the answer. Coming to the next question, economic theory and good practice suggests that a government should run deficits during recession. So when there is a recession, the government should do more expenditure in comparison to the government receipts. Okay, government should spend more. When there is a recession, the government should spend more and should reduce its taxes or can reduce its taxes. So this is the idea. Now the theory which explains the process when the government try to align its expenditure with its revenue is termed as, so when the government is focusing on the government expenditure to be equal to the government revenue. So this kind of policy will be called the fiscal prudence, okay. So fiscal prudence, the government follows a path of fiscal prudence when the government is focusing on not increasing its expenditure irrationally, and the fiscal prudence is when the government is focusing on reducing its expenditure so that it is not going beyond its receipts. The government focuses on reducing its expenditure so that it is not going beyond its receipts. Okay, so this is the idea that if the government is focusing on, if the government is trying to align its expenditure, trying to reduce its expenditure so that it is equal to its receipts, its revenue, so this kind of process or this kind of term is for the fiscal prudence. Okay, prudent, you can understand the word prudent, that means the government is focusing on the expenditure that should be aligned with the receipts of the government. Now, coming to the next question, that is, which of the following is not the reason for demand pull inflation? So, demand pull inflation, it happens, the inflation, that is, the prices are rising in a sustained or continuous manner. There is the increase in general price level in the sustained or continuous manner because of the increase in demand. So if the population is increasing, demand will increase, the prices will start increasing. Deficit financing, that means the government is doing the deficit, government is spending more. So with more expenditure, there will be more demand, the prices will increase. Over expansion of money supply, more money supply means more, if we have more money in our hands, with more money supply, we have more money in our hands, we will demand more, prices can increase. So C is the answer here, increase in administered price. If the government is directly increasing the price, so that means the prices are increasing, the inflation is happening, but without the increase in demand. Okay, so increase in administered price, this is not changing the demand, so it is not leading to the demand pull inflation. That is the idea. So demand pull inflation happens when the growing demand, demand pull inflation happens when there is growing demand, and with the increase in demand, the prices, the general price levels start to increase. So when demand of goods and services rises faster than the supply, so the price starts to increase. So this leads to demand pull inflation. Increase in administered price, if directly the government is increasing the price, or directly if the price is increasing, so that is not because of the increase in demand. Okay. Now coming to the next question, which of the following is not correct with respect to monopoly? So a bilateral monopoly exists when a market has only one supplier and one buyer. Absolutely correct. A bilateral monopoly exists when there is a market that has only one buyer and one seller. Monopoly can lead to higher equilibrium price. So in the monopoly, there can be higher price and lower quantity, generating a larger welfare for the monopolist. So the monopoly, it can be at the equilibrium. So this is the average revenue or the demand, and this is the marginal revenue, and this is the marginal cost. Okay, so the monopoly can be at the equilibrium point where it is charging higher price and it is selling less of the quantity in comparison to under the perfect competition. Yes, it can be possible. So in the monopoly, because the monopolist has the power to decide the price, so yes, the monopolist can charge the higher price, and yes, the equilibrium can be at the higher price and lesser quantity, as this is the equilibrium point. So here the firm is profit maximizing. Okay, so the monopoly can charge the higher equilibrium price with the lower equilibrium quantity, generating a larger welfare. So this is also true. Monopolies have a downward sloping demand curve. Yes, monopolist has a downward sloping demand curve. There is a restriction of entry of new firms in the monopoly market. In the monopoly, a firm has got the monopoly, either the natural monopoly through the natural restrictions, or through the legal barriers, or through the large investment that is required in this particular segment. So there can be any restriction that can stop the new firms to enter the monopoly market. Okay, so yes, there are some barriers to entry. It can be legal barriers, natural barriers, or the barriers through the investment. Monopoly promotes perfect knowledge? No. In the monopoly market, the monopolist does not promote perfect knowledge. The monopolist has the most of the knowledge. Okay, so the monopolist, it does not promotes the perfect knowledge. So this is the idea that the perfect knowledge is the characteristic of the perfect competition, where the buyers, sellers, they all have the perfect knowledge. This is not a characteristic in the monopoly, as it is the wish of the monopolist, like how much information it wants to share. So monopolist can decide that how much information it wants to share in the market. Okay, So now coming to the last question. So this is the last question. See, the non-plan expenditure and the plan expenditure, these were the terms that were used previously. Now in the union budget, we use the terms like revenue expenditure, capital expenditure, revenue receipts, and the cap receipts. Okay, so we do not use these terms like the non-plan expenditure or plan expenditure and such. So, but this was a question that was asked in 2022, and now remember this, that the terms that revenue expenditure, capital expenditure, revenue receipts, cap receipts, they are used, okay, in the union budget. So non-plan expenditure is the expenditure that is obligatory in nature, that you can understand, like the salaries, subsidies, as well as the interest payments. They are the obligatory expenditure. The defense expenditure, it is obligatory expenditure. That is the government's obligation to do this kind of expenditure. So non-plan expenditure is usually the obligatory kind of expenditure. Now, which of the following is not a non-plan expenditure, that you have to tell. So defense expenditure is obligatory. Debt servicing, that is interest payments, they are also obligatory. Debt servicing, that is returning the debt or giving the interest payments. Direct interest payments, they are obligatory in nature. Subsidies are obligatory in nature. So these are the non-plan expenditure. But the expenditure on electricity generation, this is the investment that the government do to increase the capital asset, or for the investment purposes, the government do this kind of expenditure. Okay, so this is the plan expenditure that the government is doing to improve the electricity generation, or to do the electricity generation. So this is the idea. The non-plan expenditure, a major part of the non-plan expenditure is obligatory in nature, like the interest payments, pension, statutory transfers. These are the obligatory nature expenditure that the government is doing, that comes under non-plan expenditure. Interest payments, prepayment premium, defense subsidies, grants, pension, police, assistance to states, economic services like postal deficit, all of these, like you can see that the non-plan expenditure, it is obligatory in nature, while the plan expenditure, it includes the investment that the government is doing to build the capital asset and such. So that comes under the plan expenditure. So this is it. Now you will move forward with the other component.
Hello everyone, let us now start with the subject costing. So this is your question number 1. Which of the following is a modern management accounting technique? So let us look at the options. Human resource accounting, statistical reports, responsibility accounting, break-even analysis, or none of the above. So I think you have got the answer as of now. So the option A, that is human resource accounting. Basically, this is an emerging concept, but always remember this is not a modern management accounting technique. Okay, so this is emerging, so you can be confused here, but this is not a modern management accounting technique. So this is the incorrect option. Second is the statistical reports. This statistical report is basically a tool. Okay, here we can show the reports of the cost sheets and everything, but this is not the accounting technique. So this is also wrong. Now, responsibility accounting. Basically, this responsibility accounting is the correct answer, because this is a modern management accounting technique wherein what do? We divide the whole organization into different centers, okay, different responsibility centers like production and marketing and everything, and that each center has its own costs, revenues, and profit. So basically this is emerging, and this is also a core management technique. So yes, responsibility accounting is the correct answer here. You can be confused that human resource accounting क्यों इसका सही आंसर नहीं है, but that is emerging, but that is not a core management technique. तो इसका आंसर है C, responsibility accounting. Then the break even analysis again is a technique है ना, to see that at what point of time there will be no profit and no loss. So hence this is not a management accounting technique. This is also incorrect. Okay, so the option C is the correct one. Then question number 2. Which of the following does not classify semi-variable cost into fixed and the variable cost? So basically we need to see that, okay, which of the method does not split the fixed cost and the variable cost. So the graphical method is what? When we show it through the graph, so in the graph basically we show that, okay, this is the fixed cost, this is the variable cost, and this is the total cost, right? So basically yes, in this case, so we show and split the fixed cost and the variable cost, right? So graphical method is the incorrect one. Then the simultaneous equations. So if you remember in math, what is simultaneous equation? When you solve two equations side by side. So in that case, basically you can have two, you can say variables A and B. So in this case, fixed cost and variable cost can be two variables, and we can find out through the simultaneous equation. So hence this is also incorrect. Then the high and low method. So if you remember what is high and low method, here in this case we know the total cost, है ना? We know the total cost at different activity levels. Do you remember this? So in this case, now in high low method we can find out the variable cost per unit. How do you know? So we have different activity levels, we have different total cost. So we see at, what is the highest activity level and what is the lowest activity level, and what is the difference between the two, and then we will put this in the formula. What is the formula of the variable cost per unit? Variable cost per unit has a formula: change in total cost, change in total cost upon change in activity. Change in activity will give you your variable cost per unit. So in this case also, in the high low method also, we can find out the variable cost. So of course, from the total cost, if we have found out the variable cost, we can find out the variable fixed cost also. So hence this also splits. So this is also incorrect. Then the least square method. This is basically, one of the regression method, or you can say statistical method. Here also we have two constants or two equations. Then also we can find out, fixed and variable cost. Here also we have equation somewhat looking like this: y is equal to a plus bx. Okay. So basically here also we can have a and b as fixed and variable cost. So we can find out through the least square method also. So this is also incorrect. Then the next method is the straight piece method. So if you can recall, you have done this in your financial accounting. What is straight piece method? This is in your depreciation also. So straight piece method is basically a depreciation method. Here we don't classify between the fixed and variable cost, right, in the depreciation. So if you remember the financial accounting, then you will be able to recall and see that, okay, we don't divide anything. We don't see, okay, what is the fixed cost in that and what is the variable cost in that. We just find out the depreciation for that specific period. So straight piece method is here the correct answer, because it does not classify between the fixed and the variable cost. Okay. So option C is the, option E. Option E is the correct answer here, straight piece method. Next, question number 3. Calculate the prime cost using the information given below. We have the direct material cost, labor cost, fixed overheads, variable overheads. So in the prime cost, we know that only the direct cost is included. The sum of the direct cost is the prime cost. So only the first two, that is the direct material cost and labor cost, will be included. Why not overheads? Because overheads are indirect cost. तो ये दोनों include नहीं होंगे. Only the first two, that is 1 lakh plus 68,000, that will be how much? 1 lakh 68,000. That is option B is the correct answer. Right? I hope this you have understood. Prime cost is the sum of all the direct costs, and the overheads are not included. Right? So 1 lakh plus 68,000, that gives 1 lakh 68,000. Question number 4. Calculate the break even from the following information. So you need to find out the break even point. Now you need to remember the formula. Now what is the formula? Quickly recall that in your heads, that what is the formula in units if you say. So that is fixed cost upon the contribution per unit. Okay. And if you see break even point in rupees, or you can say in sales, then what is the formula? Fixed cost upon PV ratio. I hope you remember both of these, right? Very important. Now the sale is given to you rupees 30 per unit. Trade discount is given to you 10%. Now this discount if you have given, so isko hum manenge, theek hai? So 30 minus selling price, the net selling price will be how much? 30 minus 10%, that is 30 minus 10% of 33 rupees. So that will be rupees 27. This rupees 27 is the net selling price. Then we have the direct material, direct labor, variable expenses. So variable expenses given 50% of direct labor. So 50% of direct labor is how much? Rupees 6. So can you calculate how much it will be? 50 divided by 100 into 6. So of course it will be 3 rupees. है ना? So I don't think so I need to calculate. है ना? चलो निकाल लोगे. So rupees 3 is the variable expenses. So we know in marginal costing का ही topic है. So in marginal costing we treat all the direct material, direct labor or the direct cost as variable only. So we will include this in the variable cost, right? Now we have the total variable cost as how much? 12 plus 6 plus 3 is how much? 12 plus 6 18, 18 plus 3 21. 21 rupees is the variable cost. Now do you remember the formula of contribution per unit? How, what it is? You need to remember the formulas, very very important, and the concepts. Contribution per unit is sales minus variable cost. How much is the sales? Selling price 27 minus variable cost is how much? 21. So 27 minus 21, 6 rupees is the contribution per unit. Now we have the fixed cost given to us. We have the formula. Do we know the formula? Yes. So now just put this in the formula. Fixed cost is 60,000 divided by the contribution per unit 6 rupees. So divide by 6 rupees, you will get 10,000 as the break even point, right? So option C is the correct one, right? I hope this is very much clear. Sorry, what I have done, this is option B, 10,000. Okay, option B, 10,000, not 1 lakh. So option B, right? Question number 4, that is option B. Question number 5, which of the following is incorrect with reference to marginal costing? Okay, now I hope you know what is marginal costing. This is basically the additional cost incurred so as to produce one more unit, right? What is it? Marginal cost, basically whatever is the change in the total cost when I have to produce one more unit of any product. ठीक है? So I hope very much it is clear है ना. Marginal cost is based on variable expenses, ये भी clear है. Okay, let us look at the options. So first option is, it is a method of costing like job costing and service costing. So basically what I have seen is the first option is only incorrect because this is not a method. It is not a method, it is a टेक्निक. ओके, सो ऑल दोज जिन्होंने पहले ही ऑप्शन में देख लिया है और पता कर लिया कि ये सही है, मतलब दिस इज द करेक्ट option because this is an incorrect statement, so hats off guys. So it is a technique, it is not a method. Okay, so पहला ही statement हमारा option A is the correct option. Okay, because it is an incorrect statement related to marginal costing. Let us look at the other statements also. In marginal costing, marginal cost is the change in total cost when the quantity produced is incremented by 1. So when the quantity produced is changed by 1, or you can say it is increased by 1. So yes, whatever is the change in the total cost, that is the marginal cost. So this is the correct statement. Next, it considers expenses incurred at each production stage except for overhead pricing. Indirect expenses को नहीं लेते हैं ये, है ना. Only the direct cost and whatever is the manufacturing cost, that will be included. So overheads को नहीं लेते, indirect costing को नहीं लेते हैं. So yes, this is also a correct statement. Then contribution margin is computed as selling price per unit minus the variable cost per unit. This we have already done in the previous one also na, selling price minus variable cost. So this is true. So hence the answer is option A because this is the incorrect statement. Okay, next, which of the following is not a feature of cellular manufacturing system? So do you remember where is cellular manufacturing system, in which chapter we have studied this? In lean system. Okay, this is a part of lean production system, the cellular manufacturing, wherein what do we do? In U-shape format, है ना, in U-shape format we have small cells where what do we do? जो not similar type of activities that are clubbed together in one cell. Okay, in one cell, in one cell, in one cell, है ना, one activity here, one activity here, and one activity here. So in different cells, and then it is shown in a U-shaped format, right? So that is a cellular manufacturing production system. Do you remember that? So basically here we have small cells. So what, let us see which is not a feature of cellular manufacturing system. First, it brings scattered processes together to form short focused parts in concentrated physical space. So yes, in concentrated physical space. Now let us do the question number 7. A company produced 60,000 units in the accounting period. It sold 50,000 units with 10,000 still in inventory. So 60,000 is the production, 50,000 is the units sold, and 10,000 is the closing inventory. Okay. Now it sold each unit for rupees 100. Okay, the selling price is 100 rupees. Each unit cost rupees 25 in direct material, 20 in direct labor. Manufacturing overhead was 10 rupees plus 5 in variable administrative cost. Then the fixed manufacturing overhead is 3 lakh. The fixed manufacturing overhead. Fixed administrative cost is 2 lakh. If the valuation of inventory is done by absorption costing method, then find out the value of the inventory. So basically you have to find out the value of the closing inventory, that is the 10,000 units. Okay. So first of all, you have to see in the absorption costing method what all expenses are included. So only those expenses which are relating to the manufacturing department, that are included. Okay, if it is based on administrative selling department, then वो include नहीं होंगे. So in the absorption costing, we will include which expenses. Let us see the expense first of the manufacturing. That is 25 in the direct material, 25 rupees plus direct labor 20 rupees. So this will also be included. Manufacturing overhead was 10 rupees. That is 10 rupees will also be included, plus 5 in the variable administrative cost. So will this be included? No. Administrative cost include nahi hogi. Then the fixed manufacturing overhead was 3 lakh. This is given in sum. So can I find out the fixed cost per unit? Can I do that? So 3 lakh divided by the number of units it has produced. Okay, the number of units, uske basis pe fixed cost निकलेगी ना. So 60,000 units. Why we have taken the number of units produced? Because fixed cost is basically incurred on the number of units I have produced, है ना. तभी फिक्स कॉस्ट इनकर हुई है क्योंकि हमने प्रोडक्शन करी है. तो नंबर ऑफ यूनिट्स दैट यू हैव प्रोड्यूस्ड उससे डिवाइड होगा टू कैलकुलेट द फिक्स्ड कॉस्ट पर यूनिट. सो 3 lakh divided by 60,000, that is 5 rupees, rupees 5. So this will also be included. So when you calculate this will be how much? 30 plus 20, 50 and 55, 60. 60 is the total manufacturing expenses according to the absorption costing method. So how will you calculate? The closing inventory is how much? 10,000 into 60 rupees. So that means 6 lakh. 6 lakh is the correct answer. Option number A. Right? Option number A. Question number 8. Which of the following is a notional cost? Notional cost means imputed cost. है ना? Imputed cost, or basically it means when there is no actual cash outflow or inflow. So basically when there is no cash outflow, then it is notional or imputed cost. So absorption costing. So in absorption costing abhi हमने किया है. So yes, we calculate the manufacturing expenses and then all those expenses are actually incurred. So yes, it is not a notional cost. So this is incorrect. Then historical costing. This is a past cost but actual cost, right? So this is also not included. Standard costing. This is basically a planned cost. कि इतना कॉस्ट होना चाहिए हमारे प्रोडक्ट का, बट इज इट एक्चुअल? Is it the actual cost? No, it is a planned cost. So this is basically a notional cost. So standard costing is the correct answer, that it is a notional cost. Then lean costing. Lean costing is basically when we try to reduce the waste and try to then find out the manufacturing expenses by reducing the waste. So yes, lean costing भी आपका notional cost नहीं होगा. So the answer is C, standard costing. Okay. Then question number 9, again a numerical based question. Calculate the value of stock, closing stock using simple price moving average method. On 1st December it purchased 100 units at the rate 20 rupees, and 2nd September 200 units purchased ki at the rate 22. So when I have to find out, in the price moving average method, so first of all I have to average this. So that will be 20 plus 22 divided by 2. I have to average. So 20 plus 22, 42. 42 divided by 2, that is 21 rupees. That is the average price. Now on 5th December, I issued 250 units to department X. I have to find out the value of closing stock. So first of all, I have to issue 250 units. So the total number of units is how much? 300. Total number of units is 300. Out of that, I have issued 250. Right? So what is the closing stock? 50 units. That is the closing stock. So I have to value this 50 units. So 50 units into the average price. What is the average price? 21. 50 into 21, that is 1050. Correct? So the option A is the correct option. Right? I hope this is very much clear. So this is all. This is all 9 questions that were asked in your paper 2022 phase 2. So best of luck. So if you have still not subscribed to our YouTube channel, do subscribe and also join our Telegram channel so that you can get the quick PDFs and quick updates about whatever is coming on YouTube and everything. And also if you want to, buy any of our courses, So if you want to buy any of our courses, then you can type here edutap.co.in. Okay, and then you can, under the courses section, you can see all our courses, all the courses that edutap is offering: EPFO, IRDA, IFSCA, and everything. Then under the SEBI section, if you are going under the SEBI section, so in the SEBI course, you can see all the courses that is offered in the SEBI grade, for the SEBI grade A exam. So here you can see the mock test, the full length mock test and chapter wise mock test is given in this course. Okay, the SEBI grade A top up course. And in this third one, that is here, you will get the chapter wise full length mock test also, and the solved previous year questions as well. So both of these can be very useful at this point of time. Then you can see the other courses also that is offered in the SEBI grade A. So till then, keep learning and have a wonderful day. Best of luck, everyone.